After a fantastic first day, we're going to be talking institutional custody here today. I'm really pumped. We do a lot in this space. And to be honest, this topic has been coming for quite some time now. People always ask when Moon. I think the real question needs to be when custody, because that's really what's holding the space back, according to a lot of institutional clients. We have a StarCast panel here. Now I'll let them speak a little bit shortly about their companies and what they're trying to do. We have a whole lot of questions around institutional custody, and I'm super pumped and excited to get started here. Just to kind of introduce everybody here, Pascal, we'll start with you. Your company has been in this space for quite some time. Most people know Ledger. I personally own a Ledger wallet myself. Tell us a little bit more about what you guys do and your new institutional product that you released.
Sure. So Ledger is a security company. We're based out of Paris. And we have now offices in Hong Kong and in New York and in San Francisco. And we do security by bringing the chip and pin technology to this industry. We're well known for the Nano S product. We sold 1.5 million units of the product in more than 165 countries. I usually ask people to raise their hands if they own a Nano S. Can you raise your hand if you own a Nano S? Well, thank you. Thank you very much. I also do this in other type of conferences that are not crypto conferences, and the result is not as good, but so we still have work to do. At the heart of everything that we do, there is an operating system. And the good thing about this operating system is you can port it into different type of hardware. This is why we brought to the market the Vault product, which is our B2B enterprise product that allows self-custodianship. And we ported the operating system onto an HSM, and we have a partnership with Gemalto to bring security for hedge funds, financial institutions, et cetera, et cetera. And the last thing that we announced with regard to the Vault product is we're working on a joint venture with Nomura to bring a full licensed custodian to the market.
Excellent. Let's moving on. Josh, you guys are a qualified custodian, if I understand correctly. You've got enterprise-grade insurance. I know I've run into you at a lot of my institutional clients, so congratulations, obviously, on many fronts. Tell us a little bit more about BitGo and kind of what you do in the institutional custody space.
Sure. And thanks, by the way, for everybody for coming bright and early in the morning. It's great to see everyone here. It's helpful. We're talking about custody, but just a brief background about BitGo and how we got started. We've sort of been in the digital asset security space for the last 6 years. We started out as one of the pioneers of multi-sig technology used to safely store and transact within digital assets. And so many of the large institutions in the space who have their own applications on the back end are using BitGo non-custodial wallets to power and secure those transactions. So we've got a couple of hundred clients from some of the largest crypto exchanges to OTC desks, payment processors, lending solutions, et cetera. Just to give a sense on size, across all of our wallets, we're transacting roughly 15% of all Bitcoin on-chain transactions. And across all of our tokens, which now are over 100, our supported tokens, we're transacting over 15 billion in notional per month. So that's been our business, and of course 2018 comes and we see this mass flow of institutional investor demand that's coming to the space. Of course they look and they say, hey, what's missing here? And one of the key things that's missing is custody. They look at every other asset class. They're used to seeing this role of a custodian, which we'll talk about. And so we just saw this as a natural progression of our business. Custody primarily is all about security. And so we've sort of been trusted. We had the technology already. And so we just built on top the people and process. And to your point, we launched the qualified custodial solution through a state charter trust through South Dakota Division of Banking. And that's BitGo Trust Company. Again, in the US, that's for a qualified custodial solution, which I think we could also talk about. To your point, you also mentioned we recently announced $100 million of secured insurance for cold storage through an insurance syndicate through the Lloyd's marketplace. That's it.
Excellent. Let's go to you, Alex. So I did not know this before. Onchain Custodian was one of the top 50 fintech startups in China, according to the KPMG report. It's obviously a huge deal if KPMG is saying it. Tell us a little bit more, Alex, about kind of what you're doing, especially how are you differentiating yourself in the Asia-Pacific market in the institutional custody space?
So Onchain was one of the top 50 indeed. So Onchain is our mother company. They've launched in Singapore a Onchain Custodian, which is a custodian service for I would qualify it as a boutique custodian at this stage because we don't have your size, obviously, but we aim at servicing Asia-Pacific high net worth family offices, hedge funds, and VCs who are investing in crypto and don't want to have the burden operationally and technologically to operate, I would say, their crypto assets. So we're launching actually next month. So the platform is currently being finalized by the Onchain team in Shanghai. We're reusing some of the ledger technology as well to support us with that. And our aim is really to offer more a service than just the technology. We trust partners for the technology, and we would evolve our technology with partners. What we want to offer is more service, a personalized service for investors who don't want to wait 2 weeks or even 2 days to get their phone call answered to. So we are founded by Daongfei, the founder of NEO, which is very nice in terms of having an access to a network of investors and customers in Asia Pacific, and we are funded by Sequoia Capital.
Excellent. Are there specific regions in Asia Pacific where you're focused?
We're focusing on Asia Pacific first and the whole of Asia Pacific.
Okay.
Obviously, we are based in Singapore, so it's easy access to investors there, but also China, Hong Kong, Korea, Japan, and we will be exploring, well, ASEAN as a whole, and we will be exploring Australia as well, where we believe there is a demand.
Excellent. It's a good segue to you, Henry. When I spoke to you, I didn't realize your family office needed a custody product, and you guys just went ahead and built one.
Yes.
That's fantastic. I think that's a testament to the entrepreneurial spirit that defines the space. Tell us a little bit more about what you do. And I also noticed you have a digital securities exchange that you launched recently, so congratulations on that as well.
Thank you. Yes, well, across our greater group, we've been involved in asset services and structuring for 35 years now, looking after companies, trusts, funds, family offices, one of whom was our own. About 2 years ago, we ourselves were trying to purchase digital assets, and we decided we couldn't because we couldn't find the sort of institutional infrastructure that we would expect for us as a regulated fund to access that space. And I guess we ended up building it ourselves. And today, Fusang is 100% focused on fintech, and specifically on building and providing financial infrastructure to Asian investors so that they can access the digital asset economy, as we call it, in a way that's secure, convenient, and compliant, most importantly. And we have two main areas of focus. The first, as you mentioned, is as Asia's first fully licensed securities exchange, focused on the public listing and trading of digital securities and assets. But the second is, I guess, what we're here today to talk about, which is custody and asset servicing. And custody to me means the ability to hold and secure assets, asset protection, but I think also asset servicing is critical for anybody here involved in a sort of traditional finance or institutional side in terms of all the ancillary services that go into looking after an asset, whether that's from a tax perspective, from a legal perspective, compliance, all the boring things that no one wants to talk about, but unfortunately someone has to do. So I think both of those are essential pillars to enable everyone in this room to build out the future of finance.
Excellent. You guys are obviously building amazing businesses, so congratulations on that. I want to get right to it. I have lots of questions on custody, but let's start with something basic. What is custody and what's the big deal? Banks have been running safe deposit lockers. Why can't I just put my key or whatever there? What's the big deal here?
Yeah. Well, like I said, to me, there are two sides, right? One is asset protection, and one is what I call asset servicing. And again, all of us, I think, who've worked in the traditional finance industry are very familiar with all of that. I don't want to steal my colleague's thunder in terms of how we look at protecting assets. I think there's some amazing technological solutions out there, and I'm sure my colleagues will talk about that. And so maybe I just want to focus on the second half of asset servicing. And I said, to me, the two halves, technology and operations. When you walk into JP Morgan and they say, okay, I can hold your stock, and that's it. It's not very useful. You really want them to be able to take care of all of your client needs as, let's say, a hedge fund. You say, I want to buy and sell equities. I just want to pick up the phone, make a trade, and I want my custodian to just sort out all the other magic in the background. And the honest truth is that I don't think end clients need to or should have to understand how all that magic works. They should just be able to say, look, as an institutional investor, I want to access this market, again, in a safe, secure, and compliant way. I need to find a trusted partner who can take care of all of those many and varied issues for me. And the truth is, those issues will evolve, both in terms of the technology of how we secure assets, but also in terms of the regulatory environment. The tax environment is shifting every day, right? In different countries, how things are treated. Leaving aside regulation, just to give you one example of something we've been thinking a lot about, we've got a working group that we set up with the University of Oxford to look at legal issues, legal in the sense of what is the actual status of something like Bitcoin in a country like Hong Kong. Is Bitcoin property? A lot of traditional common law lawyers will tell you, as far as they can make out, Bitcoin is not property. It cannot be owned. It therefore cannot be stolen. That was what happened in the Mt. Gox decision. And obviously, these kind of issues are, as you can see, pretty fundamental as a custodian, right? Wait a minute, if people can't steal my assets, do people have a claim against me if I lose the assets? Things like that. I think it's pretty critical for custodians to look at these issues so that investors don't have to.
Okay, so asset storage and asset servicing. Do you want to add something, Pascal?
Sure. I mean, on the security side, I think it's three things. It's the basic security. Crypto is the easiest asset to steal at scale. It's very easy to steal a private key and then transfer the bitcoins. It's very difficult to steal gold at scale or to steal cash at scale. To steal gold at scale, you need an army and invade a country. That's how you steal gold at scale. Otherwise, it's almost impossible. You need ease of use, because all these protocols are very new. So the technology that brings security also needs to make it easy to use the protocols. And with the multiplication of coins and the multiplication of protocols that are doing, from staking to Lightning to the different type of things that the protocols enable, you need to have technology that sort of enables that on top of security. And finally, it's about governance. What's very difficult with coins is that when you own a private key, you own the coin. The problem is if we all share the same private key, we all own the same coins, and it becomes a problem if we run a hedge fund or if we're several people that need to access the funds. So you need to have a technology that enables security, ease of use, and governance. I think these are the three important things.
So I'm going to put you guys in the spot a little bit here. I heard asset servicing, asset storage. You talked about security and governance. These are all attributes of the existing traditional financial system. Mm-hmm. Some of this seems to run contrary to the idea or philosophies between Bitcoin, or Litecoin for that matter. Custody or custodian models are, almost creating a central point of failure. Arguably, cold storage is slower transaction speeds, harder to access. And qualified custodians creates further, let's say, barriers that already exist in terms of expanding access to capital, financial services, et cetera. How do you reconcile the two? It almost seems to run contrary to the idea of decentralized cryptocurrencies. Maybe we'll start with you, Josh.
Sure, I'll take that. I guess a couple of thoughts. First of all, if you want to hold your own digital assets, you're entirely entitled to hold your own digital assets, exactly as was intended, by the innovation that we're all in right now and dealing with. When you have a fiduciary obligation on behalf of other people, when we talk about institutional investors that are entering the market, it's not your money. Right? You're managing someone else's money. That's another question of trust. And the framework that has been built over time has been built because while this is a new asset class, market structure, we've dealt with stories for years across multiple asset classes. We know lots of stories of the Bernie Madoffs of the world and everything else that can clearly happen when there aren't the appropriate safeguards in place. And I'm not here to talk for more and increased regulation, but I am saying that we should all learn as we get into this space. And by the way, we all watch the news. We're all excited for the news when any indication that there's large and traditional institutional demand coming into this space, because we know what it's going to do, for the overall adoption. So on the one hand, we want it to come in. On the other hand, we obviously have to recognize that for that to come in, there's just a different set of rules for that segment.
Yeah, I would add to that. I fully agree that if you are a retail investor, obviously you're not going to go after a custodian, third-party custodian, to hold your assets. You can do that on your own with one of the devices that you're selling, and it's worked fine as long as you manage them properly. But if you are an institutional investor, even in the capital markets industry, an asset manager is using multiple custodians, by the way. So that's also a best practice that we should be having in this industry. You don't have you're talking about concentration of risk. That's also manageable by using multiple custodians. So I think there are good lessons, as you mentioned, to be learned from the traditional capital markets and how it operates, and how this can be replicated in the blockchain and crypto industry. But yeah, there will be a need for different solutions for different types of holders and different types of investors, and that's where we're here today.
And just to add on to that, so as an example, cash is decentralized in a way. Cash is peer-to-peer. I can take out my wallet and hand my colleague, $100, but most people still choose to keep their cash in a bank. It's just easier and it's just safer.
Okay, so it's about creating a choice, which clearly institutions are looking for based on what you're saying. So let's dive into that a little bit. And I want to hear from each one of you. Can you speak to the actual institutional demand that you're seeing? We hear there's the price action and all that's great, but what is the actual institutional demand? I also ask this because 2018, as much as it was a bear market, for the price, the infrastructure and services market was fantastic. We should know we have a crypto business which did great as well. I want to hear from you guys about all the major regions. Maybe if one of you can speak to North America, start there, and then we'll go to South America and work our way across. What is the actual institutional demand you're seeing? We'll start with you, Josh, for North America, perhaps.
Yeah, sure. We're seeing a lot of demand, obviously, from a lot of the what we'll call the crypto funds, right? So you have a lot of crypto funds who, either right now are coming close. The larger ones are coming close to this, vague. Right now, issue in terms of the Advisor Act of 1940, and sort of like, okay, are they required to have a qualified custodian? If they're an SEC registered investment advisor, what does that make them have to, in order to comply with the regulations, what does that make them have to move towards? And so we're seeing a lot of those funds come in. We're seeing a lot of the first movements from traditional asset managers that are looking to get into this space as well. And again, they're starting, sometimes they start with the fund themselves with a small pod. Sometimes they're starting with a family office of some of the people who run the fund, and that's been another interesting angle on this. Of course, we've seen a lot of the traditional banks. We've been talking for years with a lot of the traditional banks and custodians who have been wanting to get into the space. And by the way, from BitGo's perspective, like we said before, we started offering non-custodial hot wallets. We offer obviously a custody solution, and we also offer what we call our self-managed custody solution, which is basically giving our same technology to a potential partner in order to have them serve as a custodian. We see a lot of that demand also from the traditional guys. So, when Goldman Sachs invested in us last year, that's obviously an indication of the more traditional demand coming into the space. Can I press on that a little bit? What is a lot? You used the word a lot quite a few times there. What do you mean a lot? Are you able to quantify that? Can you tell us a little bit more? Yeah, I mean, look, there are definitely some, there are definitely some hurdles to having them sort of come full in, as we know, right? We all say, like, BitGo, we say that we're building trust in digital assets, right? This whole panel, and a lot of what we're talking about here, is about doing each of our pieces in order to create the framework that these guys can get involved. There's regulatory uncertainty. We had the regulatory panel earlier today. All of these together collectively come into play. However, they all sort of interplay together. So the regulation can't come out until they're comfortable that there's a market structure that's conducive for this. So what we're doing here is literally part and parcel of that will allow a lot of this to move forward. So yes, we are seeing, when I say a lot of demand, again, not using number of clients or number of assets just for protection, but we're definitely seeing a lot more diligence questions, a lot more signing up of accounts, a lot more testing the water. Certainly from the family office side, seeing a lot more people that are starting that way, and that they're all gearing up for sort of what that next catalyst is going to be, so that they're positioned. Fair enough. Pascal?
Yeah, it's a bit of a chicken and an egg problem. Institutional money, I don't think is here, because if it was here, then the price would go up. Bitcoin wouldn't be at under 4,000 if real institutional money was to flow. So it's a bit of a chicken and egg problem, but maybe infrastructure needs to be here. You don't have real custodians, and actually you asked per region, it's the same in every region.
Okay.
I was in Seoul yesterday, same problem that I see in New York, same problem that I see in France. And so you need the infrastructure to come, and the technologies to provide this infrastructure are very young. I mean, we launched our product like a few months ago. BitGo has been in business maybe for a little bit longer, but like not for the past 20 years either. Like, you know, we are very young companies, and this technology is very young. And these assets are very hard to manipulate. So this is the type of technology where you cannot really get it wrong, again, because if you get it wrong, then you lose the asset. So I think what we're seeing right now, when we say institutional money is coming in, it means that the difference between the crypto winter of 2018, 2019, maybe 2020, and the crypto winter.
Is that a prediction?
I don't know. Let's do a prediction. Yeah, no, we believe the market will pick up in 2021. This is what we're betting on.
I'll tweet that.
Yeah, tweet that if you like. But like 2015, 2016, that was like a nuclear crypto winter. It's like, you know, you would speak to people, they would throw anything that they had at you because they didn't want to know about Bitcoin. They thought that it was terrible, etc. Now, actually, we have a lot of meetings with financial institutions that all think that Bitcoin is okay. They even think Monero is okay. Like, you know, so they're happy to go after every and any coin, which is really good, meaning that, you know, institutions are really looking at this. They really think there is a play. They're looking at it also from a tokenization perspective. They actually sometimes say, oh, I don't care so much about Bitcoin, but I understand the technology. And so me, as a financial institution, I'm thinking more about like all the assets that I have and the tokenization of these assets. And so they understand that they need to have the custodian, because the custodian, they can manipulate Bitcoin, can manipulate Ethereum, can manipulate like any other token that they're going to create on top of a protocol. And so I think that's what's interesting. So they're definitely coming. Now, it's going to take 2 years. So that's why, you know, 19, 20, and 21 we'll see things interesting, but the infrastructure play is going to be long.
Can I just press on South America a little bit? There's a narrative that runs, at least, you know, in parts of the media circles, hyperinflation economies, you know, about how Bitcoin and certain other coins are doing really well. Are you guys seeing any of that translate into demand? You know, whether it's through the qualitative conversations you have or actual, you know, assets that may be under custody?
No.
Okay. All right. Let's go to you, Alex.
Yeah, so maybe giving a very concrete example. So we're launching next month, and I know that we will already have between 5 and 10 customers from the start. And let's go through the type of customers that we're talking about here. So we have high net worth individuals who have been holding their assets on their own, on ledgers, or other devices that actually don't sleep at night too much because they stress of losing it. They stress of if they have a noticing environment with a partner that something goes wrong. So these guys actually don't want this pain anymore. They're rich enough to be able to pay a little premium to a custodian to do it. So that's one. We have crypto funds as well, the traditional crypto funds. So crypto institutional, as I call them, guys that have been in the space from the beginning, who have large amounts of crypto. Of course, the value has gone down, but will go up probably in the future. And they want to be able to focus on their activity, which is not custody. Their activity is finding companies to invest in the various projects that they believe in. They really want to focus on that activity and leave the operational and technological burden to someone else and pay for that. They have no problem with that. And then I also have, for example, an issuer of token who don't want to deal with the operational structure that we or set up to distribute his tokens to people investing in his product and to actually collect the Ether or Bitcoin or USDC that will be used as a capital raising mechanism. So that's 3 examples of customers that I know I will start with in April. Okay. So it just shows that it's quite broad, but of course, I'm not going yet after traditional institutional investors. I mean, I leave that to BitGo and other bigger guys. But yeah, that's how I could describe concretely what we see here.
Yeah, if I can be controversial, just to wake up the room, like, you know, when we speak about institutional money, I mean, you know, I agree with everything you said, but the type of players they describe, that's not institutional money. And by the way, I don't have a financial background, so I don't know what I'm talking about. But like for me, when I hear institutional money, I'm thinking like, you know, big investors, big banks, like the guys that have done Wall Street, etc. When are they going to spend a dime on buying a Bitcoin? And
but they're not yet.
No, they're not.
No, they're not yet.
Not at all.
And this is why every time we speak about like who is in the space, like we say crypto hedge funds and all these guys that are playing with coins every day, because this is the only reason why they have a business, and which is great.
I guess we oppose them versus retail customers.
Right.
More like that.
Yeah.
Henry, I'll let you chip in. Go ahead.
Yes, no, I think we completely agree. Everyone we talk to is interested in crypto and digital assets, but the honest truth is that the big institutions, right, institutional money hasn't yet come in, precisely because they say, not just custody, there is this whole long laundry list of missing infrastructure, and until I see that, I might experiment even, right, put small amounts, but I'm not going to go in a big way. And certainly for us, I think still crypto and digital assets are a tiny fraction of total assets that we custody and administer as a business. And to me, actually, the really interesting thing is securities and digital securities is what we personally are very excited about. And I think that when that shift happens, there will be a lot more interest and volume in the space, because quite frankly, total crypto market cap now is not even the size of Apple, right? To put it in sort of context of global capital markets. And I think that when people say, okay, well, not just sort of crypto native tokens, as you might call them, but you have real life securities, real world assets, digitally represented. As an institutional investor, I understand that a bit better. And as the infrastructure begins to get built out in this space, that they're comfortable with the digital part of a security, that's when I think you'll really see big money and big volumes coming into the market.
Yeah, I forgot one type of customers as well that we likely to onboard is smaller crypto exchanges. So crypto exchanges who wants to launch, but don't want to have to invest the millions necessary into a strong and robust infrastructure for custody, and don't want to do that manually. So we all see the news about crypto exchanges being hacked every 2 weeks almost, if you go on average. The smaller ones see a benefit in being able to say to their customers, we have a custody solutions for the assets that are not traded on a day-to-day basis. The smaller ones obviously are the ones that are more likely to use a third-party custodian.
So to summarize it, it sounds like institutional demand is mostly self-contained within the crypto ecosystem and some certain early adopters versus the global traditional financial services institutions.
Yeah, but there's been like some recent announcements with Fidelity backed, etc. I mean, it's coming for sure.
Right.
And 2 years is nothing.
2 years is nothing. That's right. Let's talk about cybersecurity a little bit. This topic's also close to me. I have an applied cryptography background. Why do people keep losing crypto assets, and what can the custodian do here? The whole internet, I thought, runs on PKI infrastructure. I mean, don't we know how to do security? What's the impediment here, and why are there so many instances of cybersecurity incidents for crypto?
I think there are many reasons why, but the human factor is always the main element into security breaches, in a sense that, and probably you will second me on this, but like to do the custody today of like crypto assets, sometimes it's like a computer offline in a dark room, and so that's the security. But you still need someone to go to the computer at some point, like to do some things. And yes, you have multi-sig, etc. But like I think the space, like in terms of like the technology that was available to actually do custody or to do security, was so nascent that it was just really bad. And actually, the banking industry and the telecom industry have been running on far better technologies for the past 20 years. This is the type of technology that we then now try to apply to this space, but it's an expensive technology. And so it's interesting what you say, like, a new exchange now, rather than investing into the security, they're going to seek a third-party custodian, which is true, but it means that security actually has a cost, and it is expensive. And especially in this space, it is expensive because it's real technology. So that's why you need to have real technology companies that develop real products and then take it to market. And the technology that try to eliminate the human risk factor. Because even for crypto, even when you own your own private keys, just to come back on something that we were saying before, the single point of failure is still the human. You know, if I know that you hold a lot of Bitcoins, the only thing I have to do is to torture you a little bit so you give me your private keys and then I can steal your money. So you steal the single point of failure. And so, you know, the technologies that we're putting in place sort of enforce the type of governance. And even individuals in the future will want a custodian just for that simple reason. Because if it's known that you have cryptocurrency, actually you open yourself to a whole bunch of attacks that you don't want to have, like, you know, on your person. Someone was just kidnapped in Kiev the other day because of that exact reason.
That's been quite a story.
Yeah, so, you know, governance is going to be increasingly important as the price goes up. And you're right, like today, the asset is worth nothing. But let's say that STOs work, etc., and suddenly you have real estate that is tokenized, like you have like all this wealth and value that is tokenized. Then, you know, custodianship for the individuals and or for companies is going to become increasingly important, and the technology at the heart is going to become critical.
Okay.
Yeah, I mean, I would
I'll give you a quick second here because we're running out of time.
Yeah, no worries. I would just add very quickly, I mean, like, if you think about what happened here in this space initially, this was a space that was utility-focused first and security-focused second. So all these exchanges who launched their bread and butter, their niche was not in security. They were literally focused on how do we sign up hundreds of thousands of users all the time. And so it's not you know, rocket science to realize like this was going to happen, right? And so this idea of sort of, you know, it is great to hear that exchanges are so, and obviously we see this, exchanges being a bit smarter now, recognizing, hey, let's focus on what we're really good at, and let's bring in the appropriate partners to provide security on the other side. I think you're also right on the custody side. We're not removed from that. Once you go into people and process, like we like to say, our chief security officer says that like the biggest concern is hostage taking and other types. I mean, you can really go into very scary places. But it is true that when the single point of failure or when the area to compromise is the human element, you have to make sure that you have appropriate policies and procedures to make sure that you're dealing with each and every one of those types of attack vectors.
Yeah. Excellent. I have a lot of questions, but we're going to have to stop here. I do want to ask you the question of the day. I already got your answer, when moon 2021. I'm going to build the tweet of the day as well here. Josh, when moon?
Yeah, I would say probably also end of 2020, 2021. Again, the point I said before I think is huge. What we are doing here, this is I think just an important piece to think of. It is only one of the pieces. What we are doing here is such a critical component in order to make this conducive for more explosive growth. So the more, this is the trade-off that really happens in this industry, where it's true, you're right, your first question, you said sort of like, hey, doesn't this go against what we're trying to do? But at the same time, we are trying to drive overall adoption, and that's going to happen in a framework that,
Alex?
End of 2020.
2020.
As long as people focus on what they do best and allow others, like third-party custodian, to focus on what they do.
I'm going to remove all these caveats when I tweet this, by the way.
Yeah, of course.
Henry, when moon?
I'm going to be the party poop on the panel. Across our business, I think we are regulated in like 9 jurisdictions, and we're always very shy about providing any kind of price predictions or advice. So,
all right.
I think some of our regulators are in the room as well. So,
well, I mean, it's a prediction. So we don't have a prediction from you? I'm going to push you again.
Like I said, I think that a lot of institutions need to see infrastructure built, not just in custody. I'm sure throughout today we'll talk about technology, custody, the way in which you can buy and sell things. All of it, I think, needs to come in before not just institutions, but the man on the street is comfortable with saying, yeah, I should invest in crypto the way I invest in Apple stock.
Mm-hmm. All right, very good. I think that's all the time we have. The time's up. Sign is flashing here. I want to thank you guys again, StarCast panel. Let's give them a round of applause, everybody.
Merci.